Hello, today is November 2nd, 2019. Let's go over our calls, take a look at the long-term picture, and make a call for Monday. We said Thursday night that this was a pretty good recovery, and unless we gapped under this low, higher prices should print, which they did. Pattern was one with an early high, a late high, a tendency to rally throughout the day, hit its high in its last hour. And that's what we said, and pretty much that's what happened. We said that the prior high should fall eventually, and we had a chance for a down leg to start, but they really had to undercut these lows promptly, and obviously that didn't happen. So we had the high of the day in the final hour. There's a new MEJT target for Monday, 305.923, and unless we gap up smartly, that's my call. Well, during the day, we had an ultimate sell signal that worked. There was an optional higher target to go back over this dashed line. We did that. MEJT marks this rally as false. Here's our target. This is the opposite of the pattern we had Thursday. Thursday we had the gap down, a new low, and then recovery over all the lows. It's a bullish pattern unless you undercut the low. We have the opposite, a gap up, a higher high, and not counting this last 5-minute bar, we couldn't close over all those highs, and that's negative unless we gap up and take out the high promptly. This bar at the end, I don't really count. Serious money isn't going to wait until the last 5 minutes on a Friday to make its move. Have this wall into the close near the high. The assumption is these are the amateurs and short coverers, and they're forced to cover their positions into the close. They don't stay short over the weekend. The specialists have to sell stock to them, and the assumption is that when the market reopens, they get their money back fast and usually a lot more. The one catch is when you have a new leg high and a new all-time high, that only works half the time. So we'll say 50% chance we gap down based on that. There are other things, though. We're in the area of pretty strong resistance. Let's take a look at the long-term picture and then make Monday's call. Now, I really have been disappointed in DeMarc's stuff. We had this green combo sell on the weekly chart and the blue sequential sell. You can't say it didn't work. We did get a drop of sorts. Usually you get more than this, and the stop loss, he has various ways to calculate it. One way is you take the height of this last bar. It's not exactly the way he says in the book, but you take the height of the last bar, add it to the top, but you get resistance, and the close significantly over that level is a breakthrough of resistance. So we have that level plus the upper Bollinger Band, and you can see we don't really trade over this Bollinger Band, upper Bollinger Band, very much on the weekly chart. And if you went long when you were under the lower Bollinger Band, you'd be rewarded. So this, based on that indicator, isn't a particularly good time to initiate new positions. Now here's the monthly chart, and you can do the same thing. The highest bar here is 12, and you add that to the top, and lo and behold, we're right at resistance from that method as well. But it doesn't stop there. Here's a monthly chart. You can take the height of this leg, set at 38.2, 61.8 your resistance, 78.6 is support, and 30.47 was resistance. We're over that, but not by even 1% on something on this scale, that certainly is an area where I would say caution's warranted. You're certainly in resistance. Another way you can look at the same information is to take the height of this leg, which was nearly 20 years ago, March of 2000, ignore the consolidation, take the height of this rally leg, height of these last two rally legs, set it at 38.2, and this high is off by about 3.5 points over 20 years. So you certainly have good resistance based on that as well. And again, caution's warranted. Well, now let's see where we are. We did break over this Gann fan line and we gapped over it, and that's pretty good. That conflicts with what I've said, but if you gap under this line and under this low, it invalidates the break. So if the bears are going to make something out of this, the ideal situation, not the only situation, is to gap under this. If you don't get follow through, the break doesn't count. Well, we've been trying to make this count work, and you like to see some sort of Fibonacci relationship between A and C, and if the legs are labeled right, there just isn't. But if instead magenta B ends here, there's great Fibonacci resistance. And the way you could count it is right here. This would be your A, this would be B, and that would be ABC for blue B, and all these fibs work perfectly. So all we have to do is move magenta B to the point shown. You get Fibonacci wave balance and strong resistance when you connect those highs. So you're at resistance, and the question is resistance going to win or not? Monday's pattern has the early low. We could gap up first. We have mixed signals. As positive, we had an early low, an all-day rally and high in the last bar, especially on Friday. It typically carries through into Monday's open. If we gap down instead, it's very negative. What is negative is if we gapped up, hit a higher high, we couldn't close over those highs if you ignore the last 5 minutes, which I do. There's a wall into the close. The close is essentially at the high of day. So at least a 50% chance if that's all you have, that's going to be a false move. The wave count's compatible with the rally leg being over, and we have a lower MEJT target. Now, the rally leg's been overlapping. I think it's part of a consolidation, not part of an impulse. And if that interpretation's right, at some point, there has to be a corrective wave down before the next move up starts. Just isn't all that easy to find out where this leg ends. We have a pattern in which if we gap under Friday's low, I think it's quite likely, because we have mixed signals, we have the lower target, and if we gap under that low, the odds are high, I would say extremely high, that this rally leg's over. So I think Monday's open is going to be critical. If we move up smartly, this is no longer predicted to print Monday. But if Monday's open gaps down smartly under this low and even lower than that, I think that's all she wrote for this leg. That doesn't mean the wave down has to be all that horrible. But if we do gap down Monday, I'd be aware there could be more downside coming, but I don't think we're in the mood for a collapse here. So we'll see how we open Monday, and that's today's call.